Welcome to the House of Obsidian. You're listening live to a project analysis. We're sitting down with Collective Finance right now to jump into everything they're building. In a real simple statement, and I'm going to give them a chance to dive into it. Just want to give the intros real quick. In a real simple statement, essentially, they are building a way for investors, for you, for me, for whoever's interested in their company to earn yield on commodities that are tokenized. So gold, silver, diamond-backed tokens, things like that. I'm really excited to get into it. Right before we do, if this is your first time here, you're going to see on the left side of your channel, the left side of your screen, a couple of channels. The first is the ledger. That's the anything goes conversation. The second, the most important channel, is the AMA questions. If you're asking any questions today, make sure they're being asked in that channel or I will not see them. I've got to be able to keep track of those questions, and so does the team behind the scenes that's already, look at that, man. We already have 3 pages of questions for you guys. That's ridiculous. So shout out to the team behind the scenes that's sorting that. Make sure you're asking in that channel if you want your questions answered. And then you'll see AMA Deets. You can find all their links if you want to follow along, do some deep dive while we're in this conversation. You're welcome to do that, or you can use that to follow along with them afterwards. With that said, welcome, gentlemen. Really excited to have you here.
Thank you, Matthew.
Thank you. We're excited to be here, man. You have a great community. We're excited to discuss about what we have going on. Doc, didn't mean to cut you off, brother.
Oh, you're good. You're good. Welcome, Doc.
Yeah, thanks. I was just going to say the same thing to you guys. That we're really excited to be here. You know, we've been talking to you guys a lot, sort of behind the scenes. So, really excited to speak to the community. So, thanks for having us.
Yeah, our pleasure. I've been saying for a long time, probably every conversation we have that I think, and not, when I say we, I mean on this stage, the Web3 space is hungry for legitimate companies to kick down the door and start building on the blockchain. And when we can find projects and people who are building and have experience in the real world and see that potential in Web3, I think the conversations get really exciting. So I would love to jump right in. If you want to just give a real brief overview explanation of what you guys are doing at Collective Finance, what problems you're solving, how you're bringing something new to the market that maybe the market hasn't seen yet. If you just want to give a quick breakdown of who you are at Collective Finance.
Yep, absolutely. So Collective Finance, the basic quick and dirty is that we're a DeFi project on Binance Smart Chain, and we're here to provide a secure and safe way to gain exposure to and earn yield on commodities such as gold, silver, and diamonds. So currently there's no real easy way to gain exposure to and earn yield on these hard assets, gold, silver, and diamonds. It's near impossible to get that. So that's what we're solving, is we're here to launch C tokens, which are going to be the over collateralized commodity representations. And each one will be fully backed and over collateralized by the asset that they represent. So this is not synthetics or anything like that. And main issues is, in regular TradFi, you can, you're limited to weekdays and, 9 to 5 type deals. So in DeFi, you're able to trade 365, 24/7 at all times, as well as low fees. A big thing with brokers and everything is, you try and take profit on your gold. It's a little hard because you're going to get hit with these high fees and broker fees and everything like that. We're pretty much solving that issue by bringing secure, safe, and easy exposure to hard assets.
Very cool. And when you say collateralized, could you think of that essentially like the same way that I would say, despite some of the drama that happened last week, I hold most of my personal savings in USDC or ETH. And with USDC, that would be like each token I hold is backed by a real US dollar. And that's the way that it has value. So in the same way, your C tokens and what you guys are doing is if I'm holding a gold token, that's backed by real gold.
Mm-hmm.
Yes, correct.
Yeah.
Cool.
Just like Doc always says, apples to apples, man. We're not backing apples with oranges. I think that's really important to note because yeah, with the current market the way it is, it's important to have that backing represent itself
Cool. Love it.
tangibly and digitally.
And welcome, NP. So you just jumped up onto the stage.
Hey, brother.
Hi. Yes, thank you very much for letting me up here.
Yeah, man. Glad to have you. Cool. I think you guys have just real bare bones without even getting into the nitty gritty. You guys have a legitimate reason to exist and a legitimate product, which is more to say than than many crypto projects. But talking about like the nitty gritty and the reason to exist, I would love to get into some of the details essentially of how that works. And when we talk about, I mean, your tagline I see everywhere when I go and look at you on social media or your website is that phrase, earn yield on gold, silver, and diamond, essentially. How do you, because I would say like if I was going to go buy gold, generally you just buy gold and hold it until it rises in price. Is it the same thing, except I'm just buying the token and not having to worry about the physical asset? Or is there actually another way to earn besides the price of gold going up?
Who wants to take this one?
I can hop in real quick on this. The short answer is yes. There's another way to earn yield, and that's really what we wanted to do to provide that additional exposure. So when you look at how you're going to gain exposure to the commodity tokens and collective finance, it's through traditional LP pools, right? So in that fashion, there's really you're really able to earn yield on two different standpoints, right? Number one is just by participating within the liquidity pool fees and your position just slowly growing. And then you're going to gain exposure to have basically dual emissions. So if you own some of the gold and you create LP, you're going to receive rewards in our native CLF token as well as the DEX token, which is VRTK. So there'll be multi-layered yield that you are earning whenever you have exposure to our commodity tokens and you participate in the liquidity pools.
So essentially, by buying a C token, which is whatever the asset is backed. So we'll use gold. I think that's the first one you guys are starting with. So I buy a token that is backed by gold that actually gives me access to other tokens inside your ecosystem. Can you talk about, like, as far as the tokenomics works, how that happens?
Mm-hmm. Yeah, Chrome, you want to take this one?
Yeah, basically, I think if I'm answering this right, basically from the DEX with Vertex DEX, it's a balancer V2 style DEX, and it offers multitudes of reward tokens that you can stack on to LP positions, basically. So with that, we can allow users to earn not only the CLF token, but also the Vertex token, as well as the trading fees when participating in liquidity. Yeah. Did that answer the question?
Yeah. And what does it mean to, I guess this is a good follow-up question to get into that, is what does it mean if someone does not know what you're saying by participating in liquidity? Say maybe they're coming from a background of regularly trading commodities and this is a new way to do that. What does it mean to participate in liquidity?
That's a good question.
So I can take this one and expand a little bit on what was a little bit mentioned earlier. So the thing about, I think most people who are actually yield farming DeFi right now already understand what LP formation is and normal yield farming that has been around for a very, very long time. Now, if you're coming from a traditional finance background, you basically just want to buy and hold commodities, right? Now, traditionally speaking, if you buy and hold a commodity, it's doing absolutely nothing unless the price appreciates, and then in the future, people call it like a store of value, right? You hold gold, in the future, a whole bunch of inflation happens, your gold is worth more. But now, while you're actually holding the underlying asset, which is the gold, you can actually earn yield on it. So imagine not only you're just holding the gold, which is protecting you from inflation, but at the same time you're also earning a whole bunch of different layers of yield farming. Different layers of yield while you actually just hold the gold. So because of the balancer V2 tech, right, and the liquidity pools always maintain the same ratio. Now that's important because we can weight the ratio of the tokens towards the C gold token, meaning instead of it being a traditional 50-50 pool, you can have more gold inside and less of the other token. Now that means that you're effectively almost single staking gold, right? Which means it's almost the same as just holding gold outright. So let's say, for example, in our case, we're going to have, I believe it's a 80-20 pool or 75-25 pool for the C gold token, which means 75% of your position is the gold. Then the other 25%, you can say it's a hedge, right? If it's in a stable coin.
Mhm.
So you just hold that. Your portfolio maintains the ratio of 75%, 25%. The 25% obviously is stable because it's a stable coin. The 75% follows gold, the price of gold, right? So across time, your gold is protecting you from the inflation, and then at the same while it's doing that, you're also getting VRTK emissions. You also, if you participate in the whole Volta and the VVertec system, you get a lot of extra yield there as well. Then if you lock it up, you put it inside the CLF staking platform, you're going to get access to 3 different revenue streams, which will pump out rewards to you consistently as well.
Cool. Awesome.
Actually, sorry, I want to correct myself there. So actually, the token that will be used to stake on the lock staking platform is actually the native, which will be CLF, not the Seagull. However, the idea that the vision that we have for Seagull in particular, or all of the commodity tokens, is for it to be a way to earn yield with a commodity. So based on what I was explaining earlier, that's the direction we're going for.
Cool. Yeah, that makes sense. And I'm sure we'll have more specific questions from the audience about this whole process that we'll get into, especially with the staking, just because that's infinitely popular. But essentially, you buy the gold-backed token, and then when you put it into your platform, I have 25% of my holdings are backed by stables rather than gold. What is the other? Are you guys, as far as like producing yield? So yield farming is essentially like, as a person, I'm depositing yield so that you guys can produce. What are you guys? I think this is a good point to get into the revenue streams. What are you guys doing to produce income for the entire protocol?
Yeah, we have lots of. We'll go through this systematically, but we have 3 different core parts of our ecosystem, which we consider our revenue streams, as well as kind of the backing of the ecosystem. Those 3 would be the vault, treasury, and the portfolio. I'll kick it off to Doc here to explain what the vault is.
Yeah, absolutely. And I think we'll probably transition into that towards our sort of lock staking program, because there's really a whole nother side of collective finance that we haven't talked about yet. So the vault, we really consider, or at least I do, the backbone of all 3 of our different revenue streams. So the vault is going to be basically the holder and the producer of our C tokens, or our commodity tokens. So from launch, when you look at the vault will own essentially the entire initial liquidity position of the CGLD and the stable. And then through that, obviously, there's going to be traditional mining rewards. Then we're also going to receive emissions that we talked about. But there's also fees within that pool. And there's no tax on our commodity tokens, but there's a 2% in and out fee, right? Basically, pool processing fee, if you want to call it, for lack of a better term. That's going to result in direct revenue through those fees going to collective finance. As NP had mentioned earlier, I don't think it was on this talk, but those rewards actually come in the form of LP tokens. So as we get our portion of that percentage of those trading fees, it's actually going to be intrinsically increasing that LP position over time so that it will continue to grow, right? So we're actually increasing our gold position. So when you look at those 3 mechanisms, that's going to supply the revenue from the vault. I like to think of it that there's some of it's internal revenue, and then some of it is essentially some like external revenue as well. But that's the overview of the one component, the vault.
Awesome.
Cool.
Thanks, Doc. So I'll quickly explain the treasury here, and then I'll probably let Crip take over for the portfolio if he's around. But the treasury is essentially our main bank, you could call it, kind of like the core for POL, for protocol and liquidity of the native token. We haven't talked too much about our native token, but that'll be the CLF token. The native token is kind of like a rewards and governance style token, and it's also the backbone of the ecosystem to help you unlock the most rewards. But essentially, the treasury will be the holder and owner of the initial CLF liquidity position, and kind of the same as the vault, it's going to be farming on the DEX, earning trading fees, and earning dual token emissions. It'll also be receiving, tax rewards, things like that from other the tax mechanisms within the ecosystem, and other types of rewards will mostly get funneled into the treasury. So you can think of that as kind of like the protocol bank, kind of like a normal traditional treasury. So that's the treasury. I'll kick it over to Cripsom here to explain the portfolio if he's around.
See if he is. He might be.
Yep.
There he is.
I'm around talking with my mic on. Hey, everybody. I'm sorry. I had a phone call come in. I thought I turned that off. I'm going to cover the portfolio real quick, just so everybody knows. I have a couple businesses running in the background too, so you might hear a couple things in and out. So apologize. So the portfolio is really, really important. It's basically a collection of on-chain digital assets that will be voted on and determined by the chain of governance that we're going to have in our ecosystem. So to get into it a little bit more, it's you can look at it like the additive within the oil of the engine, which is to prevent or to help with long-term structure and longevity of the ecosystem. I think it's really important to mention that the portfolio is going to help with the passive revenue streams tremendously. It's like an exploratory governance-based investments. So I'm really excited to tap into our community and our angels for this. And we have a lot of cool things in the pipe right now. Not limited to altcoin investments, trading bots, forex, maybe even looking into some forex trading. Just considering all things in the table right now. So we'll get further into that, and I do have some other things in the background cooking too that I can't discuss. But as things progress, we can open that door a little bit more.
Yeah, it's good to note that the portfolio is all focused on outside revenue generation. So not focused within collective finance at all. It's all about bringing outside revenue back in to help support.
That's right. Exactly right. It's all outside revenue. It's and you'll see as it goes on kind of how it's really shaped, and it'll come into itself over time. But on the immediate, we do have investments that are already in place. So it is outside revenue based.
Which is one of the big questions I think that gets asked all the time is, hey, do you have external revenue? There's a ton of projects that all revenue is in-house, and I think you've got to have the most tightened tokenomics of all time to produce only in-house revenue and not have it be pyramid based. And so with that portfolio, are you guys, is someone from your team in charge of that investment specifically? Is that, you mentioned the angels, is that like do you have a team that does that together? How do you guys determine what to invest in?
Yeah, that's perfect. So the team, obviously, who's up here now, we're the core team. We have been ourselves exploring different options with our connections and our network we've built over the last few years. We do have some really what I believe safe plays and transparent plays. So as far as how that's decided on right now, obviously we're going to oversee pretty much everything at this point. Governance is, like I said, it's like almost like a tier, right? Because the angels and they're really, really important to us, and they help us kind of structure some of these investments. So it'll come directly from us down to the angels, and make sure that they get kind of help shape that. And then within say we as a team come up with like 5 ideas. We bring maybe 2 or 3 to the angels, and then we decide on maybe 1 or 2, right? Or maybe all 3. And then after that, then the XCLF holders that have governance can then help vote on those as well.
Cool. So there's, 3 tiers to that. And the angels, where do they come from? How does someone become an angel? Is that angels table already filled out? What does that look like?
Doc, are you available? Do you want to?
Yeah,
I'm happy
absolutely.
to as well, but I mean, you're good at this.
Yeah, I can hop in here for sure. So yeah, so where did our angels come from? They definitely came from planet Earth, which is good, right? And we actually just finished up our seed or angel round not too long ago. So it's really important to build off what Cripsom said. We've developed something that Cripsom and myself have been really big angel and seed investors in the DeFi space for a long time. We have felt it's our opinion that angels and seed investors are typically underutilized, and they can bring a lot more to the table than just capital from an intellectual standpoint, from a collaboration standpoint. So we created something within collective finance called the Angels Table, and the Angels Table really serves as our advisory board, or almost like a de facto board of directors, right? So we go to lean on our angels for support and guidance, so that it's not just all on the core team. We have an amazing group of angels. In my opinion, it's not a massive group. It's folks that we know very, very well, and we've seen them be very supportive in the past. So I think we've been very lucky in how the seed round played out. With regard to, are we done having angels? I never like to say ever. We just had a great addition the other day. So for folks that are really interested and really want that type of commitment with collective finance, we're always open to having conversations. But it's a core part of what we've built at collective finance, our angels, and it'll stay that way.
Awesome. So as opposed to maybe the more common sentiment in the DeFi space of like, ooh, whales are bad guys. Your mindset is, hey, every other startup in business in the world is done by bringing people who have business experience and business money to invest in you, both financially and with advice or their ideas and things like that. And so essentially, you've set up a space where if you're someone who is that type of investor, they could both invest in and then essentially pour into collective with their ideas and their insight and maybe their experience or background and things like that.
Exactly. Yeah, you hit the nail on the head. And on that same point, Matt, I'm glad you brought that up. We've gotten a few questions about people being concerned about our angels in the seed round and folks being able to dump tokens at the start. And I just want to sort of address that again, if I can here. We made our angels in our seed round. We had given them a fantastic offer, but believe it or not, it's not only good for them, but it's really good for the protocol. The Angels offer really involves a lot of tokens that are going to be given back that are in our lock stake program. They're also going to be vested over time, right? So there's not going to be a massive bolus of free tokens at launch that are going to be applicable to what people would consider a dump, right? I also want to speak personally on a level about our angels. As we said, this isn't a huge group of hundreds of people. We know them all personally, and all of our seed round investors got into collective finance because they believe in our vision and what we're trying to build long term. They're not in it for a quick 10% flip off launch and things like that. So I think there's some really nice safety built in there, not only in the design of our seed round offer, but in our individual angels and the group that we have. So hopefully that gives people a little bit of a reassurance on that end.
Yeah, it does. And in a minute, I'm going to ask you guys just about your backgrounds and what you bring to the team, and I think that will shed even a little bit more light there. But while we're on these points, so essentially your three revenue streams, we've got the portfolio, which is your external revenue. It's essentially investments done by or done with the holdings. It's done in three tiers. The first is you guys look at things that you think would be wise to invest in. Then you got the Angels Table, which is exactly what we were just talking about, that collection of maybe whales and investors and VC minded people that they essentially help choose that. And then anyone who has governance tokens as well. And how do you get a governance token?
Can I add to that as well?
Yes.
Like, I don't want to seem short-minded here that we're going to be the only ones coming up with the investments, because I will say that due to our network that we've been building, a lot of these investments have been brought to our attention as people that, hey, check this out, because, hey, let's face it, I have friends in the space that have been around for a while, and I trust them, and they'll say, hey, check this out. Like, this is this is pretty solid. I'm in it. It's been good. It's been working really well. It's innovative. And then that's kind of how we build. So if anybody has any suggestions or, wants to get involved, beyond just our ecosystem, be free, or how should I say this? Feel free to reach out, and we're happy to talk to anybody about it.
Cool. Yep, I love that. I think if you locked it down and said, nope, our way's the highway, that would not lend a bunch of trust. But the reality is, dude, there's so many people in this space who think that they know what they're talking about and they don't. But at the same time, there's so many people in this space who really do know what they're talking about. Especially right now, I would say that if you're someone who is, just looking at like the wider landscape, if you're someone who has not sold your investments in the last 6 months, you must really believe in what is happening on the blockchain and what's happening in Web3. And so I think that there is a wealth of knowledge to be had inside of communities.
100%, 100%. And not just to answer part of your question as well with regard to how is the governance completed within our protocol. We talked about the angels table, but we're going to have community governance as well, and that will be with our ex-CLF holders, and we will get into that, I'm sure, more. But that's essentially our liquid lock staking program, right? But there will be additional community governance driven through our ex-CLF token as well.
Cool. Awesome. And then the treasury. So just breaking those down real quick, we talked about the portfolio. The treasury is essentially the in-house bank where your native token, a huge portion of your native token is held and is used to yield farm the same way that anyone else has access to if they're holding your tokens. It's just that,
Sorry, I'll cut in there a little bit. I'll cut in there a little bit to explain the treasury a little bit more. So the interesting thing about the treasury, right, is that because of the way that it interacts with the Vertex DEX, right, which is everybody knows now it's a balancer V2, it's based on the balancer V2 tech. You can think of the treasury like a yield optimizer, right? So out there's a whole bunch of these that tag onto the balancer style DEXs out there. If you're familiar with Beats and what's the other one, Solid Sex, there's things like Solidly and OXDAO. Right. So what they do is that there's a optimal strategy that you can employ on those kind of DEXs, right? Vertex one of them, and that optimal strategy is much better if all of the funds are pooled rather than across 1,000 people, right? So because of the way that the XCLF functions with collective finance, it will all be in the same contract, right? And then in the same contract, which will be the Geonosis multisig. Then the Geonosis multisig can leverage its high position on the Vertex DEX to vote for itself or give itself more emissions. So it causes a ever increasing yield optimizing loop where every week you get more emissions, right? And then because you have more emissions, your position grows, and then you have more power to vote for yourself, and then the emissions get higher, and you can quickly see how this is like a very popular yield optimization loop for a lot of protocols. So that's just the treasury. Now we got two others. There are entire protocols that are built upon just that one faculty, and we have three. So yeah, I just wanted to kind of explain that a little bit more, because it's a lot of people hear treasury and they just think, okay, yeah, a whole bunch of native tokens inside, right? Yeah, it's a lot more than that.
Right. Your treasury is not sitting still. And I think that's what you want to hammer on, is that a lot of people hear that and it just means the place that you hold your tokens. That's not all that you guys are doing.
It's not even sitting.
Yep, exactly.
I'd like to bring a point up too that I always try to explain to people. You can look at collective finance like we really are looking forward to bring some of that Web2 community over. So if you just imagine if you were a Web2 guy and you wanted to get some exposure to some Bitcoin, some gold, some silver, maybe on a DEX. We've tried to bring all that stuff together to make it more palatable for everybody. So it's almost like it's like your own little portfolio within within one ecosystem, if you know what I mean, because we try to bring exposure to quite a few things. Stables, well, I guess you can call them stables, but gold and Bitcoin, and this is really going to be unique, I think.
Yeah, absolutely. I think that was kind of my point at the beginning is I think the move that we are going to see take place in the next year or so in the Web3 space is just more legitimacy. It was really fun in the last 2 years to throw money at just the most chaotic things you've ever seen and watch it go up. I think, yeah, we'll see that anytime there's a harsh bull market. But I don't think that's going to be what defines the space anymore. People are looking for actual businesses. They're looking for actual revenue. They're looking for actual places to invest. They're looking for actual areas to put their money to work. And anyone who can provide that is going to be the companies that essentially position themselves for success in the next market. So, well, we've talked about the way that you guys are making money with your revenue streams. I want to talk about the way that investors or community members can earn yield with you. One is like the simplest way that you already mentioned is just holding the C tokens. We've touched on for a half a second on the staking. I would love to learn a little bit more about the staking and what that looks like if someone wants to stake with you.
Yeah, Chrome, maybe you can walk everybody through this too. And I think it's really important here while Chrome's talking. You hear us talk a lot about multi-layered yield. And that can mean different things to different people. For us, it's pretty specific, and it's just like it says, it's yield in a multi-layered fashion. So as Chrome takes you through how our CLF and XCLF works, think about the different layers of yield. I would just preface everybody with. Go ahead, Chrome.
Cool. Yeah, so our main locking and our main staking system is what we call XCLF lock staking. So our native token is the CLF token, and it is paired with Bitcoin on Binance, so it's technically BTCB. And so creating a liquidity position with CLF and Bitcoin, you can then stake that on the Vertex DEX, which we will get a gauge receipt. It's kind of like a receipt token back. So, when you create liquidity, you get a token that represents the liquidity. When you stake it on the DEX, you'll get a receipt that represents that stake liquidity. So with that receipt token, you can then come onto the Collective Finance platform and lock it within one of 4 different tiers. The 4 different tiers are 30 days, 60 days, 90 days, and 180 days. And so these are all separate pools. You can invest in each and every one of them and have positions, within the 30-day, within the 60-day, within the 90, within the 180. It can be equally split up. And so this is what will create XCLF, which is actually an NFT, which will represent your position and will slowly unlock and earn you rewards. So based on what you chose, either the 30-day, whatever, it'll unlock after that certain amount of time. It'll burn the NFT and give you your receipt token back. So XCLF is the main kicker and the main way to earn the most robust rewards within the ecosystem. With what we talked about before, utilizing the Vault, Treasury, and Portfolio, a lot of those rewards and yield generated will be going to XCLF holders. So if I posted an infographic in the chat here, and it kind of shows the process: create liquidity, stake it on the DEX, lock stake on Collective Finance, and you get your XCLF and a multitude of rewards. So those rewards get broken and weighted between all the different tiers. So in the infographic, it shows 30-day gets 15% of the rewards, the 60-day gets 20%. 90-day gets 27.5%, and 180-day gets the most with 37.5%. So this is the weight of the rewards. It's not like your APY or APR or an ROI or anything. It is the weight of which the rewards get distributed. So an example would be if we earned, this is all just an example. Let's say there was $1,000 in a mixture of Bitcoin, C Gold, and stables. That $1,000 would get split up in 15%, 20%, 27.5%, and 37.5%, and distributed to all of the different tiers and to all of the holders. So these rewards are in multitudes of tokens, and it'll be a variety of stable coins, Bitcoin, our C tokens. So as we continue to launch C tokens, there will be gold, silver, and diamond rewards. as well as more CLF tokens, which you can then use to compound positions, use for the little taxes and stuff like that. So this is what Doc brought up before in multi-layered yield. Essentially, you're able to earn the trading fees as well as the dual token emissions from staking on the DEX, and then on top of that, by creating the XCLF, it unlocks you to start earning more stable and a variety of rewards, like I said, with Bitcoin, stablecoins, and gold. So that's kind of the core of XCLF. If anybody else wants to jump in, if I missed anything, feel free. But yeah.
No, you did. That was a great explanation. Thanks, Krim. I want to just sort of add to this real quick, and then I want to have NP jump in and really explain XCLF because it's a really, really unique feature of collective finance, and we think it's going to be really, really popular. But the idea behind XCLF is really to incentivize participants to lock and then reward them in a way that gives them the many options, not only for taking product or profit, but also in participating within the protocol. So when you look at our reward tokens, they weren't just randomly given, and the fact that they're CLF stable coins, the commodity tokens, and then potentially Bitcoin as well. What this does, it gives participants the way to basically stay involved in a manner that's not only healthy for the protocol, but also in what they prefer. There's multiple different ways to take profits. You can recompound immediately and then increase your yield, and you can do all of this really with a few touch of a buttons, without a lot of gas fees, and without putting in more of your own capital, right? Everybody's goals in investing are going to be different. So what we try to do with our reward system is give all the different opportunities for participants to sort of stay engaged how they want. The next point, and I'm going to let NP talk about most of this, but is XCLF. So when you think of XCLF as being a locked token, to me as an investor, it's one of the things sometimes that is less palatable when I have to go lock my tokens for 6 months or a month or whatever it may be. With collective finance, we have found a way to take these locked positions and make them liquid and create a market of their own, which we think is going to be very, very appealing. So, NP, I don't want to put you on the spot, but I think you're probably the best person to explain how XCLF works and then how that market will be. Do you mind?
Yeah, sure, of course. So the what we've done with the XCLF token is that technically they will actually be NFTs. So instead on a traditional MasterChef, I'm not sure for the more technically inclined, basically a MasterChef is just the contract that controls all of the rewards, right? It records everybody's position, it records how much percentage share everybody has in whatever pool, and then it has internal accounting to know who is owed what every time a reward goes out. Now, for the XCLF, instead of routing to the connected wallet, it's routed to the stake itself. So when you make a lock in the 30, 60, 90, or 180, it actually mints you an NFT, and then that NFT is it records all of the information of that particular stake. Now, what this means is that you can have multiple different stakes in the same tier. So, for example, if halfway through your 180 day, which is counting down, maybe you got 100 days left, you wanna make another position, but you don't want to force yourself to increase that 100 day back to 180, right? You can have another position of $1,000 or whatever it is, and have it count down from 180, and your original position still counts down for 100. Now, let that marinate for a second. Let's say you have a whole bunch of different positions. Now the token pumps a lot. Let's say, let's just say, for example, either maybe you want to exit for whatever reason it is. These NFTs will be transferable to other people, and whoever you transfer the XCLF to and NFTs to, they will basically get that position, including the rewards that have not been claimed. So if you haven't claimed the rewards for, let's say, 2 or 3 days, you send it over to someone else. They can get the lock and the underlying position, as well as the rewards for 2 or 3 days. Now, what this will do, we predict, is we will create a secondary market for the XCLF positions, right? So traditionally, if you, like Doc was saying earlier, if you're a little bit not so risk on, you might not feel comfortable locking up your tokens for a very long time. However, with the setup that we have, you may choose to go to an NFT marketplace and transfer off your XCLF to someone else who would buy it for whatever price. Then you can think about it this way: these NFTs, not only do they hold the underlying position, right, which is the CLF BTC, and then but it's also yield bearing because it generates yield when it's being staked, and as it's counting down, it's producing yield because you can claim daily. So these NFTs, as they move around and people buy and sell them across the marketplace, they will have this market-driven secondary market for the NFTs. So it'll be interesting to see how much people price the NFTs once the collection is listed and it's kind of moving around a little bit. And if maybe somebody might pay top dollar for a lock, a 180-day lock that it's unlocking in 7 days or something, and the original owner is like, okay, yeah, I've made enough on this. I'll sell it off at either break even, or it will, maybe they earn a little bit more on it. But it'll be really interesting to see what the market decides to do with the ability to buy a lock stake from someone else or sell their lock stake to someone else. So yeah, we really wanted to have that capability built in. So it's not only just that it's a little bit more risk off because you can the lock is not illiquid, but also at the same time the locks itself also produce yield. So there's that whole speculation over there for the market to decide how much the value or the worth of each NFT is.
Yeah, and I think, I mean, even outside of just like price speculation, I think having stakes sellable is a huge draw. Does that mean that if I lock up $1,000, I can immediately sell my stake for $1,000? Maybe not. I mean, that's going to kind of depend on what the market is doing. But you guys still receive the benefits of having the tokens locked, and the investor has the ability to let go of that position if they need out, which I think is huge especially if you're going for something larger, right? Because the reward percentage in your stake goes up the longer you lock.
Correct.
Like 30 days, it's like 15% of that pool. Whereas if I locked for 180 days, that's more than double the rewards, 37.5%. And so I think sometimes people look at the long locks, and it's really easy to say like, ooh, that would be sweet, but man, I don't know if I'm willing to lock up my money for that long. But when you add in the variable of like, well, like if I decide after 90 days that I need an out, or maybe I really need my money, or maybe things aren't going well for me, like that black swan event holds less weight when you know that there's an option for you to move things around and still have access to your original money.
Exactly.
Yep, correct.
Exactly.
So keep going, sir.
Oh, no, sorry. I didn't mean to cut you off there, but to me, that it makes it so much more appealing, and it takes the sting out of that lock. The other thing is, you ask yourself, well, how can we do something like this without hurting the protocol and disrupting liquidity and things? This platform offers the perfect way to do that, because all of that information in the NFT, I like to think of it almost like as a wrapper, the NFT wrapping this information. Even though that wrapper and everything inside the NFT is getting transferred, nothing within it is getting disrupted, right? So it continues to support the protocol like we want, and it's actually beneficial for everybody. So you guys can probably tell it gets me a little excited. I think this is an amazing development, and this may be me speculating a little bit, but I think people are gonna copy this model, because I think it's a really strong idea.
Yep. Definitely, for sure, man. I mean, liquid staking has been becoming increasingly popular over the last year, especially like you mentioned earlier, Matthew, about the the bear market hitting everything. Is really not just about single tokens anymore. People are very, very concerned about liquidity in the market, as well as the ability to move your capital around quickly and efficiently. So definitely one of the advantages that will give us the protocol, right, is that everything what doesn't matter whatever happens with the NFTs, they move here, move there, people sell it for a high price, low price, doesn't matter. The protocol still has that liquidity locked inside the contract in the platform. Then on the user side is also advantages, because you can do a whole host of cool things, right? So imagine if you have if you have if you have 10 different locks, right? So let's say you want to farm, but you don't want to let go of your position. Just make a new position or make a few new positions, and then you can sell those as on the secondary market. And so there's a lot of interesting things that you'll be able to do.
Yeah, there's actually I think people will find a meta there and figure out how to essentially play it with the way that you can lock things up. And I wonder, because essentially it's going to be based on, I think that's where it gets fun, just as someone who's a little bit degen inside, is playing that guessing game of okay, so I locked something up for 180 days. How much could I sell it at 60 days versus 90 days? What if I sell it at 100 days? The value of that NFT liquid stake, I think, is going to go up the closer you get to the release date of that lock. And so it almost becomes gamified at that point.
Yeah, gamified, not only gamified, but it's also, if you look at it, is if an asset you're buying, right, which is basically the lock, and it's increasing in value as it approaches the event horizon, which is the unlock, and then at the same time it's also getting you yield along the way. This again parallels exactly what we're trying to do with commodities on blockchain, right? Which is you hold an asset, protects you against inflation, and it earns you yield as it goes along. Same thing with CLF and BTCB, which is exactly why we paired it with BTC. So you got that nice price appreciation once the bull market comes around, and it's also liquid, and it's also possibly speculating increasing in price as it goes along, and then also it's earning you yield. So it's all comes together, my friend.
And when you say earning you yield along the way, so I lock up for 60 days. I lock up $1,000 for 60 days. That essentially, and then I'll get 20% of the reward percentage there. So am I paid out my yield at the end of those 60 days?
No.
Or so how does that process work of getting paid my yield then?
Traditional MasterChef, you can claim anytime. It will be the rewards will be dripped out to you via the rewards contract. So you can claim daily, you can claim hourly, minutely, secondly. Don't recommend in every second, because you're probably gonna get gassed by the blockchain. Yeah, but probably daily, right? Probably daily. Most people will just come around daily, claim a bunch of rewards, and then maybe one day after claiming daily for about 30 days, you realize, okay, I've ROI'd 50%, and I can sell my NFT now for 70% of the original value. So I've basically already done a 1.2x with my initial capital. Yeah, why not just do it? And when they do that, instead of dumping the token, they're just transferring the stake to someone else. So the protocol doesn't suffer
There's no sell.
Yeah. There's no sell. It's just it's a liquid transfer of a yield bearing asset from one player to another, or one user to another, and then the original player can think, okay, now that I've caught the pump, I've already liquidated my original lock position. Just gonna wait a couple of days, and when the price comes down a little bit, I'll get back in, or I'll buy another NFT from somebody else who has a longer position, or with whatever lock details which I'm comfortable with.
That's really interesting. That might be one of the most interesting pieces to me, is that there is you relieve so much sell pressure without, I think you guys have taxes and stuff in your ecosystem, but without having to have super high taxes, or without having to find ways to promote twice as much buy pressure. You relieve a ton of sell pressure just by allowing people to trade liquid stakes. Because if I need to make my money, I don't sell my token at that point. I sell my lock, which means that someone else might sell the tokens in another 60 days or whatever. But I think that's a really interesting piece that we hadn't even hit on.
I agree, 100% agree. So yeah, sorry to kind of monopolize the mic a little bit here, but yeah, I'm really excited about all this, and because when I was building it with the dev side team, it was like all the ideas that we initially had were all coming together. So it's really been an exciting journey for us. Anyway, so I guess I will close off with this on this topic, which is it also, the secondary market actually tags onto the first one, right? So there's all this liquidity that we have. It's all locked up in the staking platform, and then we're reducing sell pressure as it goes around. And you mentioned taxes over there. It's really not a lot. I believe the taxes that we have on the platform are 0.5%, like to perform an action or something. So, and then if you have the NFT, that goes down to 0.1. So it's basically negligible. And then, but at the same time, while all of this stuff is happening, all of those little bit of taxes it builds up, right? And it's helping the protocol by getting the liquidity back to the treasury, which it can then use to again optimize yield farm on the Vertex deck. So, man, it's all feeds into each other, man.
Cool, awesome, man. I feel like I could ask you the nitty gritty of all of these details all day long. I want to make sure that we get to some audience questions. There's a ton in there. The last question I wanted to ask before we get to the audience questions is just because I've seen it asked a couple of times already in the questions channel, is about you guys as a team, your background, the experience of like, what does it look like for you to be here? Why you? I know that we say all the time, and I'm hearing other people say the same thing, that at this point, a lot of people are more interested in investing in teams than they are just ideas, right? You can have a great idea, but if you're not a good team, you're not the one that's going to execute on that idea. Someone else will come along and take it. And so I would love to hear about your background as people and as teams, and what you guys are bringing into the space.
Of course. If you guys don't mind, I'll start off. So, just so everybody knows, my name is Zach. My Discord handle is Cryptzom, but I am a entrepreneur at heart. I've been starting businesses and not a ton of them, just a few in particular that I can handle. I have been working on a network between on-chain and off-chain for quite some time now. I have built a pretty unique network, and as far as businesses go, within that network, there's a lot of business owners, right? And they're all a lot of tangible business owners. And I see there's a need for this in DeFi. So as far as what we can bring to the table, kind of what we're about, I'll speak a little bit about me and Doc here. We both have several different businesses running in the background. You might hear some things throughout the AMA where I have to jump on and talk to one of my employees, but it's just kind of how it is. So we are trying to bring that to this space because there is a need for not only just teams, but transparency, I would say, and integrity. And a lot of people wear that kind of on their shoulder and kind of wave it around loosely when we take it very, very seriously. So we've worked on, trying to bring this heavily to this space because I see the need for it. As far as my real life businesses and what I do exactly, I have a agriculture research company. I do some advising on different practices in farming, and oh gosh, I could go down the rat hole there, but basically renewable energy, agriculture research, and development for technologies. And I also have a full-fledged diesel custom fabrication shop, and we do custom builds and everything you can imagine. And I can drop pictures in later to show everybody. But and then I also have some connections in finance. So some of my customers that I work with in my network, one guy in particular manages big time hedge funds, and he's from Silicon Valley, and so I get to kind of learn a little bit from him as well, and work together on some of those aspects as well.
Awesome. And in small world, I won't full dox this, but I'll say a fun fact about Zach is, I think the first time we were talking, we realized that one of Zach's favorite coffee shops just happens to be a very little coffee shop from a very small town that I am from. So it is a small world, not just in crypto, but everywhere. I don't live there anymore, so if you're trying to figure out, probably won't know where I'm from. But I thought that was pretty sweet, I think. And as you're saying your name, are you guys doxed as a team? I know you're doxed to me. I've seen your faces.
We're
and you're KYC'd by Assure, but you're also doxed on YouTube and places like that, right?
Oh yeah. Oh, 100%. Yep. I was actually going to hop on video today, but I'm on my phone running around my shop, so I couldn't hop on. But yeah, we are fully doxed.
Cool. Sweet. And the other gents, what is your background coming into collective finance? I know Doc is a real life doctor. We've already talked about that. Don't know if he has the capacity to unmute. He might be with a patient right now.
Yeah, no. I can hop in real quick. So yeah, I go by Doc. My real name is Brian. So just like Matthew said, I am a physician in the real world. I've been practicing for God, it's probably close to going on 15 years now. Probably about 10 years ago or so, I sort of followed my entrepreneurial side a little more and started a business. I've since then started a few more. So I have 4 businesses now, one of them multinational. I've been a big investor and a precious metal investor my whole life. And I've also been a really big angel and seed round investor. And I think really that's one of the things, as Cripsam said, that he and I in particular bring to the table here is really our business experience. And when you look at the foundation of how we built collective finance, it's not built on unsustainable APRs or rebases. It's really built on sound business principles and a foundation and designed around stability and yield and growth, right? So yeah, so that's who I am. We're readily available all over the place as well. Getting to what Matthew said, everybody talks about transparency. We try to walk the walk as well. Whether it's the KYC, all of our audits literally just got done today, so we'll have those done before pre-sale. The doxing, we dox ourselves all the time, and we'll continue to do so. You know, in the real world, I have a wife, 2 little kids. So I'm an everyday guy as well. So that's the skinny on me.
Sweet. And Chrome and NP, you guys are the more crypto specific gentlemen on the team. Is that right?
Yeah, I'll jump in quick here. I'll give a little quick and dirty of me. So my name's Chrome. You can also call me Monkey, and my name in real life is Jacob. So I've been around in the space for a couple of years. I think coming on 3 years or so. I started off in like traditional finance, stocks and stuff like that, but then realized it was a very regulated and heavy hard hitter game. So it wasn't easy to get into. But that's when I discovered DeFi and crypto, and I kind of skipped right past centralization, went right into DeFi. Started playing with AVAX and stuff like that. Been participating and investing in projects and other protocols and helping them out for quite some time. And I've kind of seen, what works, what doesn't work, what a team needs to bring, what a community should look like. Kind of the more operational end is what I do, running social media, white paper stuff, organizational stuff. So yeah, that's kind of where I come into play, more in the back end, also in the communities and all around. Yeah, that's a little bit about me. I'll let MP take over if he's here.
I am. So I'm basically just Doc's patient. So okay, just kidding.
He's
just
treating
kidding. I think
you.
a lot of yeah, she's treating me for back pain, of which I need a lot of plant-based medication.
Oh
Nice.
my
He knows me
gosh.
well.
Okay, so I think actually a lot of people in the chat here might already know me. I've been in the DeFi space in the capacity of either advisor or
you've been on our stage before.
Exactly. So yeah, and I've been in the capacity of either founder or director, kind of advisory or consultation for for mostly tokenomics actually, but in the better part of the last half of last year, I picked up dev work quite a bit while working with a lot of devs for a lot of different things. So yeah, I think DeFi has been kind of been my home for maybe 1.5 years, maybe close to 2. Before that, I did trade stocks and forex as well. But yeah, DeFi is a lot nicer. And one of the things I really like though about DeFi is you get to meet people from all around the world. And then there's that whole thing where people say DeFi is the Wild West, right? And with the Wild West, you get a lot of bandits, but you also got a lot of gunslingers, man. And you got to find a nice crew that you can roll with. And I think I definitely found that here, man, with the 4 of us. So yeah.
Nice. That is a good analogy right there. You got your boys for the gunslinger crew. Sweet. Mm-hmm. Awesome. Well, I want to jump into some audience questions. I think looking at you guys, you have a pretty diverse background. Are you the developer, the main, is everything that's being developed in-house by you, NP?
No, I get a lot of help from all the connections that we work with. So that's also another nice thing that I want to touch on a little bit, is that we got a lot of help from quite I don't want to name drop anybody, but if we were to name the developers that we've been working with, a lot of y'all would definitely know them. They've been around this space for a very long time, very trusted individuals, have never rugged, have never done anything suspicious. So they helped me out quite a lot. And they helped to build the contracts and everything. I think most of the simple stuff is deployed and managed by me, but for the more let's say like the staker, that all that stuff is very, very technical heavy, so I get a lot of help from that for that. Yeah.
Sweet. You're not getting devs on Fiverr. They're people you know personally.
Well, most definitely
No.
not, man. Fiverr is no go, bro. That is bandit haven. That's like walking into the town with all the bandits saying, "Who wants to be part of the crew?"
Yeah. Okay, so I'll touch a little bit because NP's not going to name drop, but I will do one in particular because he's a very close friend of mine. He's not only a developer, but he's an amazing person. He's been around the space for a long time. I talk very highly of this guy because not only have I been a really big investor in his projects when they first took off, but we've, through all the mud and all the muck and everything that's happened over the last couple years, this guy has come out, waxed and just looking real good because he's just such a unique person, and that is LB. I don't know if anybody knows LB in this space, but don't go blow him up, please. But I am kind of putting him on the spot. But I tell you, he is an amazing person. Everybody on here can second that. As far as who's NP's working directly with, too, I won't name drop him, but I will say that he is amazing as well. So we're very, very blessed to have like such an amazing team behind us as well,
Cool. I love that. LB has been on our stage before as well.
Yeah, I wanted to add on to this too, just that so everybody knows, all of us up here, we have a very close relationship. We were friends and worked together before collective finance, and this idea didn't come up overnight. It has been well over 6 months in the making, a lot of blood, sweat, and tears, and it was our own capital at first too, right? So all of us really, the four of us up here, we really, really value our relationships with each other. And we think our team is really one of our strengths. So just really important that everybody knows this just wasn't a ragamuffin thing put together here. We really appreciate what we have, and we value it greatly.
Yeah, and I want to add to that too, Doc. It's really important to know too, you guys, that not only are we interconnected in Web3, but we're also interconnected, on a business level in real life as well. So that's important to know that we're not just working here in Web3, but we're also working together in real life. So that's pretty unique.
Yeah, for sure. Awesome. Well, let's jump into some of these audience questions. The first from Massimo. He said, the main focus seems to currently be on precious metals, gold, silver, diamonds. Has there been any thought for future investments or coins on other real world assets that are not metals?
I'll hop in here. There has been thought of it, but outside of those three, I think we haven't really aggressively jumped down the rabbit hole yet. One of the things that's really important to us at Collective underlying our seed tokens, and Cripsaw mentioned this earlier, is apples to apples, right? We don't want this to be like a traditional synthetic route. So, for example, we have real actual gold that's backing up our gold token, right? It's not dollars or stables backing that up. So our collateral is intrinsic to the system that we have set up. If we can't collateralize something in a way that we find safe, efficient, and within our model, then it probably doesn't fit in collective finance, at least right now.
And I want to add to that too. We have been approached, and I was just recently approached with, another commodity potential partnership. And, the unique thing about the DEX that we're launching on the Vertex DEX is, the commodity, it's like a commodity driven DEX. what's going to happen there in the future is going to be unique. So, I could see a decent partnership lining up with other commodities into the decks that then we'll directly work with. So, but like Doc said, it has to be like a 1-to-1. We have to be able to back it apples to apples, no synthetic. So we're going to be, it's not just metals or diamonds, but we do have things in the pipe. We just have to make sure that everything lines up.
And when you say back 1-to-1 and not synthetics, like you guys need to be able to actually hold the asset itself in order to have the token.
Correct.
On chain, correct.
Yeah. And really, that's just based off price action more than anything else, right? So if you have exposure to gold, that's why you want it. You want exposure to gold. You don't want exposure to the dollar necessarily, right? So if you look about it, if it's a pendulum that swings both ways, if gold goes up or goes down, if your collateral is gold, they follow in complete synchronicity, right? If you're collateralizing the gold with something else, then you're going to run into issues with price movements to the north or to the south.
Yep, exactly what Doc said. We're the complete opposite of synthetics, and we want to stay away from that model because it is just truly unsustainable.
Yep. So, I mean, as far as adding, adding new tokens at some point, it would have to be something that you can actually hold and collateralize with just that. I saw someone asking, and the reason I asked that question also is I saw someone asking about, like, could you see yourselves adding like crude oil as one of the future C tokens?
That's funny because I mean, I did get approached with a partnership based around that. So we're talking about it, but that's, to me, I don't think we're going to turn our head to it, but I could see, like I said, something like that more lining up with going onto the decks, because that's where the commodities are. We want all the commodities to be at, right? For what we got going on. So I think that, it would have to be very, very safe play, man. I mean, I'm not going to lie. Like, it would have to be very safe. Hence why we were with PAX-G. If you look, I mean, they're our like number one go-to in digital gold, in my opinion. So, yeah.
Crip, you're right. Sorry to interrupt you, but you're right. But from a regulatory standpoint too, it's something that you really have to keep in mind when you look at, for example, at how PAX-G is regulated and where it's regulated. It's really sort of at the top of the food chain, right? So if you're going to be diving into the area of commodity exposure, you better sort of understand the current regulatory outline or framework as well, so you don't get yourself step in any holes that you don't want to.
Mm-hmm.
Cool. Awesome. Next question. Man, I see so many in here. I just want to make sure we're asking good ones. There's a few questions about one about the angel investing. I'm trying to find that. Well, I'm not seeing it. I'm sure I'll see it in a minute. But question from Massimo, and I'm sure NP can answer this one. He said, to make it easier for investors, would you guys be open to incorporating a ZAP function in your DApp for LP positions so that we can simply supply CLF and automatically enter as a provider for CLF BTCB LP? Let me rephrase. It would be easier as an investor to enter an LP with, example, $500 of CLF, and the DApp would auto buy the $250 of BTCB, removing the manual work of acquiring it ourselves.
Okay, I think that's probably something I have to answer. So
yeah, that's why I said that.
Yeah, the short answer is okay. So that will require a script that will have to. So this is what the thing that has to happen, right? If you have the CLF, if you want to click one button and it does everything for you, the script has to go to Vertex, put the CLF into the LP, then stake it into the gauge, and then come over to the CLF platform and mint and lock it up for whatever tier that you choose, and then transfer you the NFT. So that's like multiple steps. That will most definitely have to be done manually at the beginning, or when the DApp first launches. But we can work on writing a script to do that for the users. I would say though that probably a ZAP function in that capacity would probably have a little bit of a fee on it, because I mean, just from the steps that I've laid out there, that's some gas, right? So So yeah, maybe like a 0.5% or 1% fee to do that. Possible though, definitely possible to get that done.
What about just regular? I was going to ask, like, what about just regular LP creation NP? Isn't there Zap functionality for just creating LP itself?
Single-sided NP. Yeah.
Yeah. That's already available on Vertex. You don't need both tokens to get into liquidity pool. You can just have one. So if you only have BTCB, you can just deposit that, and then it will make the LP for you. And then, or if you only have CLF, you can just deposit it and also make the LP for you. Now, keep in mind that will still cause a little bit of price impact when you do it one-sided. It's the same as if you swap out and then combine, but you're saving an additional step and also a little bit of gas.
Absolutely. Let me just repeat that again so everybody understands what NP said, because it literally answered that question to a T. You have there on Vertex with the balancer V2 Tech, you have an option to go into. So if you only had CLF or you only had Bitcoin, you can enter into the liquidity pool with just one side on that token, and then it automatically will break it up. You just have to be careful of price impact, what NP said at that point, but that's available. So if you want to get into our liquidity pool and you only have CLF, you don't have to go sell some of your CLF to get some Bitcoin and then create that position. You can do it with a single token.
Cool. I think that probably solves part of the question that he was asking.
I also, really quick, actually, just to note, because he did say if in the example it was 500 and 250, it's good to note that because we mentioned this earlier that we're going to have weighted pools and they're going to be more heavily weighted towards one side. So let's say for CLF, if you had $1,000, you'd only need $200 of Bitcoin to create a new liquidity position. But there is the option for single-sided LP creation. Just wanted to add that.
Cool. Easy. Next one's from Freedom. He asked 2 questions. The first was, any concerns with impermanent loss with the LP pairings? Is this balanced by the ratio being balanced? And then his second related question, any concern with a large drop in the real world commodity prices dropping? Although in the current situation, it looks like it's going to bring back interest. Do you guys have concerns with either of those?
I could take the part about the concern in a large drop in commodity prices, and then maybe NP could take the impermanent loss part. So when you look at the commodities that we're dealing with in particular, gold, silver, and diamonds, they don't typically have price movements and aren't nearly as volatile as the crypto space that we are used to, right? So I don't think we have any concern of the price falling out with regard to gold, silver, diamonds. I think there's a definitive history there that's pretty clear. We also feel intrinsically as a team, I think it's similar to the Bitcoin argument. As gold, we feel that gold and precious metals are closer to a breakout on the upside than they would be on the low side. So, and I know that doesn't answer that question specifically, but no, with regard to our commodities, and when I say that, I mean gold, silver, and diamonds right now. I don't think we have much concern about a global crash within those commodities, i.e. I don't think we see price swings like you do in oil, like you would with in gold or a precious metal.
Cool.
Okay, so to answer the impermanent loss part, for the CLF BTC liquidity pairing, so it's going to be 70% CLF and then 30% Bitcoin, which means that it will always maintain that ratio. So whatever the price change of either CLF or Bitcoin, when you withdraw the LP or you break the LP, you always get 70% of one of CLF and 30% in Bitcoin. So this means, right? Going to try and find a simple way to explain this. Let's say the price of CLF doesn't move, right? And then but the price of Bitcoin goes up. That means that in the pool, the price of CLF will be dragged upwards by Bitcoin in order to maintain the ratio, right? Because now you have the same amount of CLF in the pool, but each Bitcoin is worth more. So the internal accounting of the DEX has to understand that when users withdraw, it has to give a ratio accounting for that price change in the Bitcoin side. So that will be what you consider impermanent loss. You can have it to the downside or the upside. If Bitcoin increases in price, then CLF will be dragged along with it, or if it goes the other way, then that happens as well. But the ratio wise will always stay the same. It'll always be 70%, 30%. So
Cool.
I hope that answers your that question there.
Yeah, nails it. Next question from Serenity. Will the team be watching the NFT marketplace and sweeping up the underpriced NFTs to return the revenue back into the project?
I love Serenity. What a good question that is. So yes, the answer is absolutely. And sorry for jumping in on this, guys. And I'm assuming Serenity is referencing sort of the secondary XCLF.
That's I would assume like the lock
Right.
for
Exactly. Yeah. So for sure. And our treasury, and we will always be looking for deals, right? So if we can buy some of our own liquidity positions that are yield earning for 80 cents on the dollar or 90 cents on the dollar, you can bet we'll be gobbling those up, right? Because that's just it's a good financial move. So yeah, we will absolutely be watching that closely, and that's on our radar, and we'll be implementing.
Cool. Sweet. Good answer. Next question from Lexon. You guys mentioned that you're KYC'd. Do you guys have an audit for the contract and codes?
Yes, we do. We have an audit for the CLF token, C Gold token, as well as the pre-sale contract. Those I think they're publicly available. I believe Monkey has posted the announcement or will post it soon. All three of the contracts are verified and audited on the blockchain, and they actually came back with a few recommended changes, and when we changed them, then we sent them again, redeployed, and then passed them back to the auditor, and he said, okay, all good. So those three are steady. Then he's also going to help us audit the staking contract when it comes out. But that one there's still a little bit of touching up to do with on the NFT side. So
yeah, I'll be making an announcement, I think, after this AMA to post the new audits.
Cool. Perfect. Next question from Nalaka. Nalaka said the yield from Collective looks really lucrative. The white paper was technical, but your guys' pictures made it simple enough to understand. Hats off for the infographics, whoever did that. But from my understanding, is the revenue stream coming in from, he said the trading, so I would assume he's meaning, what was your
probably
third?
The swap fees for the C tokens, yeah.
Yes, coming in from the portfolio is probably what he's referencing. He said, is that enough to provide such great yield for the yield farming and lock staking and all of that without drops in the price of the native token? Am I misunderstanding the way that the revenue streams work?
No, I don't think so. And I think the biggest thing is to take all three revenue streams into consideration, being the vault and the portfolio and the treasury, right? Whereas we talked about the treasury is really largely internal revenue. The vault is going to have a little bit of internal and external, and then the portfolio is really all external revenue, right? So it's that combination that adds up to the sum of all parts, not just one or the other. And that's why we have three, right? Whenever people talk to us, it's not, we don't just have a portfolio or just have a vault. We have all three of those. They're each producing revenue in their own different way, and they are all independent of one another, right? So say for example, it was one month that maybe emissions were down, or trading fees were down in the gold pool. However, we could have had an excellent month within the portfolio, right? So those could even each other out. And yeah, we'll be able to vary the rewards based off of how much revenue those three streams produce. And we will likely go to governance. If there's ever a point where we're producing more yield than we anticipated, or maybe there's less, that's when we go to the angels table and then the community about, hey, how do we want to move forward collectively?
Cool. Next question from Fargan. He said, how much time do you guys as a core team spend with your own community? Are you subbing that time out to like moderators, or are you guys actually active in your own community?
I would say go into our community and take a look. We are there all the time, right? And we live. Look, I'm on East Coast. We have Mountain, we have Pacific time, and Peace about 12 hours off for us too. So we are always around. We have also built a really strong community so far. We've been around for a long time. We have some great promoter influencers that are friends of ours as well. So yeah, we're always available in the community. I don't know, any of you other guys have any comments on that?
Yeah, we're always around. I mean, I kind of I'm always checking the Discord and engaging with people and staying active. It's kind of part of what we do. And obviously, these guys up here are a little bit busy with their real world jobs. They got lots of stuff going on with the business, but whenever they can, they're always hopping in and chatting. And yeah, we do have moderators that like to chat, and just even people in the community that love to hang out and be active and be nice. So if you're interested, come join.
Cool, beautiful. Next question from Yosti. Yosti said, if our investments are backed by real commodities, and I think this question is just tapping into the chaos of the last week and looking at things like SVB and Signature and all that. He said, if the investments are backed by real commodities, does that mean that if for some reason collective finance went under, you could liquidate commodities and pay out investors in a theoretical levels? His essence of his question, he said it feels safer, or like there's a guarantee of profit. I do want to say I don't think it's smart for anyone to guarantee profit. If you're someone that's looking at investing into projects, you should not be looking at crypto as a guarantee. But I did want to give you guys a chance to answer that question.
Yeah, definitely.
Yeah. Oh, go ahead, Mikey.
Oh, okay, cool. So yeah, we are obviously keeping everything 100% over collateralized, and that's going to be on chain, available for everybody to see. And that is, in the sense of what we've seen recently with bank runs and stuff like that, where having that over collateralization available on hand and ready will be, definitely for that type of scenario, though we don't really foresee it happening. I don't see why people would all want to sell their gold at once. But yeah, that's why we have everything fully backed, over collateralized, and available to see on chain at all times. But there is never, guaranteed profit in crypto or in DeFi. That should never be a thing.
No, but let me add on to this too, because I think it's a really important point, and it goes back to the business principles that we've put collective finance around, right? So what is unique is collective finance, just like real world businesses, is going to always have an underlying net asset value, okay? And that's going to be a combination of the vault and the position there, right, which is actual gold and backed, or diamonds or silver. Then you're going to talk about also these on-chain assets within the portfolio, right? Even if we leave the treasury out of it. So on those underlying assets within the vault and within the portfolio are going to give collective finance a floor, right? So essentially what that means is, just like any other, I would say, stock or anything else, I hate using those words, but you could trade at a premium or a discount to that net asset value, right? So I think it's conceptually one of the things that's super important for people to understand about collective finance, that because of the structure of our vault and the portfolio, it makes things, I don't want to say impossible, but very difficult for the bottom just to fall out, for lack of a better term, right? So and that net asset value is going to be steadily increasing over time, which makes participants' holdings arguably more valuable, right? So that concept, really important to understand.
Cool, easy. We'll just do a few more questions. I've already had you guys here for almost half an hour longer than we normally go. We're having a good conversation. From Random Ape, he said, what would be the situations in which you guys need to mint new C gold tokens or C silver tokens or things like that? How do you guys decide that? Are you acquiring more gold and then you mint new tokens, or how would that work?
Yeah, that's a great question, actually. So we do plan to have everything completely decentralized and operating on its own sense. But in these beginning stages, it is essentially handled manually, where we have all the PaxG held and collected in a Gnosis safe on Ethereum, and then we're only allowed to mint up to there's 115%. We're only allowed to mint up to 100% of it. Yeah, I think MP would have a pretty good answer to this as well, but you guys can.
Yeah, it's very simple. It's just if collateral is at 105%, can mint more. If it's not at 105%, can't mint. Easy.
Cool, easy. Next question from Arch Enemy. He said, why not use, I'm just reading this off the top of my head. I saw it in there a minute ago. But why not use dynamic NFTs to update the information instead of creating new NFTs every time someone wants to buy a new position? Why not use dynamic NFTs and allow me to just add to a position and then update the metadata?
Yeah, MP.
I actually have
okay.
I have a good thought on why you wouldn't do that, but I wanted to give you an answer first, just because I'm already thinking about like gaming it. But
Yeah, no. So if you just have one NFT per person, then that's just the same thing as having one like it being connected to the wallet address instead of the actual stake. So the whole idea here is that you can have multiple stakes, right, all counting down at different times. So then that creates a okay, so as time goes by, if we record all the stakes on a single NFT and even have the single NFT record different stakes within the same tier, okay, yeah? That sounds complicated, but it really isn't. Basically, you're just collapsing all of the different NFTs under one NFT. If we have that, then how do you price it out? It's very much more difficult to price it out in the market. Because now you have a NFT with a 60-day stake, a 180 stake, a 30-day stake. One is counting down 1 day left, other one is like 100 days left, one is 90 days left. So it's too many variables in order to price out the NFT on the marketplace. I think it will be a lot more, or we thought it will be a lot more fluid or liquid for the marketplace if each individual stake was sellable in and of itself.
Yeah.
Hope that answers the question.
And I think just as someone who's not on your team and just looking at it, I think there are a lot of use cases for dynamic NFTs. I would argue that liquid staking is not one of them. And the reason being, I mean, we hit on it earlier that you guys have a huge reduction in sell pressure by allowing multiple NFTs to be created and then sold. So instead of buying tokens, holding tokens, and then selling your tokens, which causes the price in tokens to go down, you would actually buy a token, stake and lock up that token, and then sell the stake itself with the rewards. And so when you're trading, you're not affecting the price of the token itself. If you just had a dynamic NFT, essentially that stake just grows in value every time and becomes less attainable to the masses, right? Eventually that stake is just going to grow so big that maybe your average person that can only buy a smaller portion, maybe I'm looking to buy $50 or $100, that there is no stakes available for me to buy at that point because they've just grown to a position that maybe a smaller holder could never afford to buy. And so now they're just waiting for their stake to end and they're selling the tokens. And you defeat the whole purpose of the sell pressure. And then, so I think for you guys, it would be a mistake to do that. But I think as an investor, I wouldn't want that either, because I want the freedom to trade, right? When I'm investing in a project, there are some things that I want to make long-term trades, and maybe I see some real potential in a company, so I'm trying to hold on to their token for a year or two. Or maybe I want some quick an $80 gain today. The way that in my mind that would work is by buying a set of tokens, locking them, getting yield for, I don't know, 30 days or something, making enough of my initial back and then reselling that stake and then just playing that as like a game and redoing that. And it never hurts the price action of your token, but I get yield from that. And get to like still participate in the quick flip trade game, which I think especially a lot of NFT investors, that's really what they're into. And so you actually can pull in that demographic without ever hurting your token with sell pressure. So I think there's a lot of reasons to not do dynamic NFTs.
Yeah, well said, Matthew. That was awesome. Thank you.
My pleasure. I think the way that you guys are doing it is really interesting, and I think a dynamic NFT would cancel it. There are I think with GameFi, dynamic NFTs are super, super useful, and more projects should be using them.
Yeah, I think for what we're doing, it's going to be totally unique in that people are going to be discovering and creating new strategies as they go along, which is something that's really cool and I find fun is that, every day somebody might discover some type of new strategy or way to benefit the best. And so I think that's something cool and unique about what we're doing here.
Perfect. I agree. Final question from the audience, and then I'll ask one wrap-up question from Serenity. He said, what type of deflationary mechanisms do you guys have in place to keep the project healthy over the long term?
Nice. Yeah, we have little tax implementations all around within the ecosystem, as well as methods for burning the token, as well as plans for future utility and gamification, and lots of other stuff coming for the CLF token as we continue to build into the future. I know NP has been working on some fun stuff for some of his other projects, and we're definitely interested in incorporating CLF and just continuing to build and add utility and more ways for people to utilize the token.
Cool. Awesome. The final question I would have, and I'll say this, if you're listening and your question did not get answered, guys, let me look real quick. We had 9 pages of questions. I think we probably answered a large portion of them. I'm sure there's some that I missed. If I missed your question and you do want that question answered, feel free to jump into these guys' Discord. Like they said, they're super active and ask those questions. But in the short term, for anyone that's been listening and is really intrigued by what you guys are building and they want to dive a little bit deeper, connect with you more, or get involved in your pre-sale or anything like that, what would be the best place for them to go immediately following this conversation?
The best place would just be to head over to our Discord. We're going to be, posting lots of information, updates, as well as, updating the website, getting the D app ready and uploaded. So definitely the best way to stay informed would be join the Discord, follow our Twitter, engage with us. You can always ask us questions, even reach out to us directly. You can open a ticket in the server. We always love talking to people as well. If you ever want to talk to us directly, get in a video or voice call, don't hesitate to reach out. We'd love to chat with anybody.
Beautiful. And I'm making sure that Discord link, if you're listening right now live, the Discord link is posted in our AMA Deets channel, and that'll stay there if you're listening anywhere else after this event is over. And you were going to say, Zach?
Oh, I was just going to say, yeah, reach out, man. We're very, very open to conversation. I'm kind of always on the background watching and don't always engage to everything. But we have a lot of things going on right now, so I'm just trying to attend to many different fires that have irons in them.
Totally understandable. You are, like you said in the beginning, man, you got a ton of different businesses operating, and I think that's an asset to have on the team, someone who understands how to build business. Cool, guys. This was a blast. Usually our conversations do not go an hour and a half. Occasionally they do, and we get some good questions coming in and really get to get into the meat. You guys have I think a little bit more going on inside your ecosystem than maybe the average project in DeFi does. And I say that in a positive way.
Thank you.
There's a lot of stuff that we can just dive through and work through. And I know this will not be our last conversation with you guys. This was great. Thank you for joining us. Anyone listening, those links will be posted. When is your guys' pre-sale, by the way?
This Friday.
March 17th, St. Patty's Day, man.
Have a beer and a pre-sale.
That's right.
That kind of works because you guys are gold themed. And, there's leprechauns and a pot of gold somewhere. Was that on purpose?
You know what? It wasn't, but it's so ironic that it worked out that way. I thought, you know what? This is crazy, but hell,
Yes. Someone draw up a cool picture and put that on Twitter because it fits. That's cool. Sweet. Awesome. I'm excited to keep talking with you guys and watch you grow. I will say at the very end of this conversation, I always need to clarify, nothing that I'm ever saying is intended to be financial advice. I'm not telling you where to put your money. If you think I'm telling you where to put your money, just go find a different YouTuber you want to get shilled by. That's not our goal. We love to dive through companies that are building and are trying to bring legitimate solutions to real world problems. And I think anyone who's really in love with the Web3 space feels the same way. So this is a great tool for you to research. If you're interested in what Collective Finance is doing, you can find their links in the description. And and go check these guys out. Make sure you join their Discord right away. Join their Discord, ask a question, say hi, tell them thank you for a great conversation. And we did announce there was going to be a giveaway today with some CLF tokens, I believe. Those we're going to tag. If you asked any question today at all, that counts as an entry into the giveaway. We'll tag those winners in the community announcements channel. In order to claim, you got to be in their Discord. So make sure you're already in there.
Awesome. Thank you so much, Matthew. This is a fantastic time. Definitely look forward to coming on again in the future. There's so many things more left to cover that we sadly didn't get to touch on, but just a lot going on in this project. We got lots of big plans, lots of stuff coming these next few weeks. There's lots of events, giveaways, so much planned. So definitely join the Discord. Stay tuned. And yeah, get excited for the pre-sale on Friday.
Yeah,
Beautiful.
Thanks, Matthew. Always a pleasure, man. Always.
Yeah, man, my pleasure. And have fun on St. Patty's Day. It's going to be a big day for you guys.
Thanks, man. Hopefully we see you there. We're going to have a party going. So,
yes, sir. Awesome.
All right,
Sweet.
man.
Thank you guys. Thanks everyone for listening. We will see you next time.